How's everyone doing today? Everyone doing all right? Let's have a great week. Everyone have their armor on, ready to get into the arena? Good, I'm here. I'm here, Blake. Hi, Mike, Luca, Patrick, Kevin, Ziggy, all my trading warrior brothers and sisters. Kareem, how are you? Okay, well, just a couple of things I'm seeing which kind of are not on the same side of the market as a few guys I really respect, which lowers my confidence in what I'm seeing. Anyway, with as strong as the dollar has been, you know, threatening the breakout at 94 right here, the Aussie's been holding up like a champ. Okay, and we all know what happened to Kiwi. But if I didn't have a bias about the dollar, which, you know, looks like it's on the verge of a breakout, I would say this was a bottom and that this is probably corrective. You know, I'm not an Elliotician, but maybe this was A, and this is A, B, C for B, and that there may still be a C to the upside. Of course, 79 is going to be very important. Everyone see this moving average here? So if we broke out through 79, you could take it back to 80.5. Would be a measured move, or maybe 1.618 of this. Part of the reason I'm saying this is the yen got everything it wanted yesterday. Everything, you know, nice victory for Abe. I know Greg is looking for higher levels. Nick had about 1430. I couldn't chase it up here. It doesn't feel like a short to me, but I couldn't get long up here either. Capiche? But actually, the way the yen looks, I think we're close to at least a short-term top, which makes me constructive on gold. Okay. And the yen crosses look tasty. Even the strength, the euro yen here. So the euro yen filled the opening gap with weakness in euro. Why can't we pull back to 33? And you have a pretty manageable risk here. Over you risk the high of the move. I mean, it's not normally what I like to do, have my stop where everyone else is, but it's very possible that maybe this was a 1, 2, 3, or this was 1, 2, and there's one more pop. I'm kind of thinking that it's between here and turnaround Tuesday. So that doesn't look that great to me. And euro pound could pop here again. See this? I mean, as big as the break was, we're still putting in a higher low here. This does not look bad to me either. Last week, I thought we would try 91 or so for a third drive. So if this is going to pop, probably your preferred short would be the Guppy. Guppy hasn't filled the gap yet, but it didn't, you know, it's not close to new highs. And sometimes these gaps could just be exhaustion. And plus it was news related, right? We headed up, you know, a lot of the election may have been discounted, the election results with Abe. And then, you know, buy the rumor, sell the fact is a possibility. And so if I'm right about the yen being close, I know everyone's bearish gold, and, you know, I'm kind of a long-term bear too. But when I look at the gold here, someone asked me on Twitter if I thought it would bounce. And I said yes. Bitcoin's lower too. Let me just find it. Gold. Okay. So when you look at it on a 4-hour basis, so both the Aussie, which Greg, you know, Greg is bearish, both Aussie and gold. I look at this and I go, you know, there might be a chance here between here and 1270 for gold to dig in its heels without making a new low. And just like the Aussie has that resistance at 79, the same in gold. And that maybe we get another one of these from in here. And what could be the catalyst for it? You know, starting to think that a lot of guys that were bullish all the way up in S&Ps are starting to say we're getting close and risk is becoming extreme to be long now. I know I'm the boy who cried wolf, but you know, they're talking 25.85, 25.86. So, you know, maybe between here and there, we've gotten all the great news of the tax package, the budget. So now the tax package, maybe there's a speed bump. So it all kind of ties together that the yen has had its hurrah. I know Greg is looking for 115 before there's a major sell-off. So I'm thinking, you know, don't be long yen. Look for risk off with some of the crosses, yen crosses. And I think that a contrarian position in gold right now would be long. I think there's mainly just a lot of gold bears. We had a guy on last week said we could go to 1260. That's where he's a buyer. So I don't have a lot of high conviction today, but just some things I'm looking at, some things I've observed, nothing I'd bet the farm on, but just my thoughts coming into today. Actually, I like the crosses look like better shorts because they're not making highs, James. Week in November, December. So what's your target, Luca? 118 or so? I'm thinking there might be just one interruption in the S&Ps before the year-end rally. And Blake sent me some pretty interesting stuff that kind of agrees with that. So anyway, I'm just the host here. So I don't have to know. And also, I don't always know. But just a couple of thoughts that I have here today. I have a hard time wanting to short the gold here or buy the yen here. Doesn't mean you have to go the other way either. But some of the yen crosses, look, even the Aussie yen, with as strong as the stock market has been, it still has a little bit of a gap. But look, you know, this could have just been a retracement rally. And why can't it pull back to 820? All right, there's some confluence here. You know, and there's some divergence here. It kind of has a little wedge look to me off these highs. So I'm not talking about home run balls anywhere here. I'm just talking about looking to be a guerrilla warrior. Luca's looking for 115. Okay, that's an agreement with Grega. So I'm probably wrong. All right. So, but I look at some of these yen crosses, and to me, if I said, oh, I missed all of this, down here I would have been saying, boy, besides it being a nice scalp on the long side, that this would be a nice rally to sell into, probably between 50 and 61.8. So I'm going to bring the experts on now. Okay, we do have a great interview. Anyone know Vin Diesel? A fan of Vin Diesel's movies? He's always driving fast cars. You know him? All right, well, the Vin Diesel of the FX world is going to be with us for an interview. He's a great guy and a smart guy. You guys know, yeah, the Ned's going to be with us. Doesn't he look like Vin Diesel, Patrick? Yeah. He likes that. He likes that. That movie star thing. All right, so I'm looking forward to hearing your ideas, guys, and especially looking forward to hearing Blake's, because, you know, I'm sure Blake I'm sure Blake had a busy weekend. He's a good dad. He went to 150 soccer games probably, and the rest of the crew to straighten me out. I remember in LAR coming in with no ideas, and the community would start putting up screenshots, and then there'd be some compelling things to do. So that's the advantage of us having a community, don't you think? You could come in cold and not even have an idea, and within an hour have some things to consider. So I'm kind of wishy-washy today, so maybe I could get some clarity. I'm sure I'll get some clarity from the guys, and you will too. Okay? So let me bring Blake in.
Hey, Dale.
Hi, buddy. How are you?
Good. Happy Monday.
Yes, it is. I'm blissful.
I'm tired. We had some friends come over yesterday, and it's so funny. Well, it's not really too funny for me, but yeah, no, it's we have some friends that are they gutted their kitchen and their all their flooring, and they're just redoing everything, and that they literally pulled out everything, and they're putting in a whole new kitchen and everything, and so they're like, I know we invited you, we invited you guys over, but we're gonna have to go to your house because our kitchen is in shambles, and we're like, yeah, sure, come over. This is earlier this week. Well, we found out that one of our pipes underneath our house has busted, so we got to go through the foundation and fix that. So anyway, to make a long, it's a pain. Anyway, to make a long story. Oh, it's a big one. Yeah, it's a many of thousands of dollars of fixing. Anyway, but we had them come over, and we don't have a kitchen sink because our kitchen sink is kind of screwed at the moment. So we made do, but we had some friends over this weekend. It was nice. You're right. My son had a soccer tournament, so it was all sports, and then got to enjoy a little bit at the end of the week, so it was good. It was good. I saw
that picture of him getting ready to make a save. He's a goalie.
Yeah, he is. He's our goalkeeper. Unfortunately, they lost their last game, and the team that they played was really, really good, and those kids really just wanted it more. And I think our kids were tired because they played late on Saturday night and had to play early Sunday morning, and they just you could see they all hungered out a little bit.
Your son would be a goalie, a goalkeeper, because they're kind of the risk managers, aren't they?
He is. He's like, this is my house.
Yeah,
my house.
Right.
Yeah, he is very. But it was good. It was fun, even though that they lost their last game. But actually it probably worked out better because I didn't want to drive another hour to come back to that later on yesterday evening anyway. So
you have some conviction in these markets coming in today?
Well, first of all, no, I don't. Although I will tell you this, I didn't, and I hadn't even explained this to like the guys and gals in the chat room. I mean, I sold a little yen. You guys, some of the yen pairs, I bought yen actually, very small, extremely small, more to just track the market, because if you watched the week ahead video, I was looking for the yen, most of this to be priced in, and I was looking at the dollar yen to come up and break higher and challenge this lower trend line, or this upper trend line, excuse me, for this triangle. Okay. So the week ahead video, we talked about possible gap up in some of these yen pairs, and I myself, I sold a very little euro yen. I sold a little bit of dollar yen. I had it written down on my post-it note after doing my weekend analysis. I'm like, okay, I want to short the dollar yen at 114 and change, and I want to sell the euro yen at 134 and change. So I did. I obviously, when you put in a tracker position and it's working out really well, you go, man, why didn't I really step into that? But I'm kind of nervous. It's not so much the yen right now that I'm nervous about. I'm more nervous about the movement that we're seeing in stocks, and stocks are extremely bullish. So I don't want to get too aggressive when the stock market is, obviously at all-time highs, and we are a little stretched, I think, but still, I want to be really careful here. But if you see, the dollar yen, I mean, this is very, very clear risk, and that's to me, that's when you can identify risk like this, it's great. And I know the dollar yen.
That's being a goalkeeper, buddy.
There you go. Yeah, it is. It's like, okay, I know.
There's the net.
Yeah, there is the net. I know as long as I can hold it, and they're not going to get those top of the corner shots on me. Of course, I'm not going to be able to reach, but I can reach most of everything else from here. So,
Yeah.
you know, this is a dollar yen. I know where the risk is, and you know, you look around like the euro yen. This is really key for me. This weekly, you know, 618 retracement up here. This is a big deal, and I think, you know, a lot of people look at this and go, oh wow, look at the euro yen's breaking higher, you know, on a daily chart. And I'm like, you know, as far as I'm concerned, as long as we stay, you know, below 134.50, you know, we're really within the realm of still, you know, seeing some sort of reversal up here. So, and again, I have to.
Funny, you and I were thinking the same thing today.
Yeah, you know, and that's good. That, you know, that's confirmation, and that's one of the benefits of using like ForexAnalytix. You know, if you're out there and you're using ForexAnalytix and you go, okay, well, you know, I know that on a weekly basis, you know, we're right up against this this resistance, and then you read, you know, the analysis. It says this is a big level resistance for the pair and should be watched carefully. The weekend elections could push us to the 134 level, but we will be looking for a possible failure up there. What was the high overnight?
Nice. Yeah.
You know,
Nice.
the high was 134.12, and we're trading at
clean it up.
we're trading at 133.60 right now. So I mean, it is oh, we got to look at the Canadian here in a minute. I just picked up
analysis.
Thank you. And I just picked up a little bit of dollar Canadian. The reason why is because if, you know, I'm short a little dollar yen, and that's fine. But the yen pairs are not going to act like the dollar Canadian. This dollar Canadian's bullish, and I'm really the move on Friday obviously caught a lot of people off guard. I'm going to go back to the yen pairs, by the way. The dollar Canadian caught a lot of people off guard, and we are now starting to squeeze higher. And this 38% retracement comes in at 127.20. All right, and I think if we could break this high right here at 126.60, we should surge towards 127.30. And overall, I mean, if you look at the dollar index is threatening the neckline of the inverted head and shoulder pattern. Now, again, I picked up a little dollar Canadian this morning because I'm like, well, if the dollar does break out, what is the dollar pair that looks like it could move the most? And I look at the dollar Canadian, and I think that thing could really squeeze, because remember, the market is still long Canadian currency. So this move on Friday really caught some people off guard. So you know, so I picked up a little dollar Canadian right near here, and I'll see if it continues to move. We got a little bit of data coming out this morning with wholesale sales out of Canada, but that weak CPI and employment data, you know, on Friday really turned us around, and you know, like I said, I'm not 100% on board that the dollar is going to break out. And I know I've been talking about this for like the last couple of weeks. I'm not 100% on board that the dollar is going to break higher, but I think this dollar Canadian is more Canadian associated. You know, it's more of a bearish Canadian play versus a bullish dollar play. Now, if you don't, you know, necessarily agree with that, we'll take a look at like the Canadian yen. You know, this Canadian yen, it's, you know, it really rejected from this channel high, and the Canadian yen is really at risk of reversing hard. And I'm not short the Canadian yen, but remember this big inverted head and shoulder pattern here. There's a lot of people that are long. Ooh, excuse me. Sorry, like I said, it was, you know, I you know, had friends over last night, so it was kind of a late for me on a school night, if you will. But we're approaching this this neckline. If we break back below 89 or 88.75, that is going to be extremely bearish, the Canadian currency in this Canadian yen, because this would be a failed inverted head and shoulder pattern if that happens. So that to me is something that everybody should be watching, going, you know, staying in tune with the yen pairs. You know, here's the pound yen. It's not really doing a whole lot. I mean, the pound yen's just kind of, you know, it's in between, and we just hit the 618, but not a whole lot to do here. The Aussie yen 618 as well. We did gap up, and I think we moved right to the 618. I think I talked about that on the video over the weekend. And the New Zealand yen is still pivoting off of really key support. So obviously key support is just about 50 pips below where we're at right now. But overall, Dale, it's been a I think we have to keep a very, very close eye on what happens with stocks. Stocks continue just to rally. I mean, it's just nonstop, rally mode, and I don't know what's going to stop it here. We're getting towards that. We're getting towards the time of the year where people naturally start buying stocks going into the holidays, and like I said, I don't know what's going to stop.
Yeah, the year-end rally started at the beginning of the year. You know what I mean? The year-end rally started at the beginning of the year.
It did. Yeah. And I don't know if things are going to, I'm not in the camp that the market's going to go up forever, but I'm also in the camp of, I don't know what's going to turn it around. I don't see anything, until we get, and I know I've said this a lot, but until we get past this, the taxes, the tax reform, until we either find out that it has passed and we get to buy a rumor, sell the news, or it's a situation where it fails and it doesn't get the required votes, then I think we would see a pullback or some sort of sell-off. But until that happens, I mean, we could, really be rallying into the end of the year, as as the market just is making the assumption that the taxes are going to continue to get, the tax reform is going to get done. And, I have to turn my attention to a lot of the Elliott waivers and go over to I have to go over to Grega, because it really helps me out, because I, as a just looking at basic technical analysis, I don't really have any targets, but if you look from an Elliott wave perspective and you go, okay, well, Grega, for example, he's looking, he's looking for 25, 25, 85, maybe 86, that helps me out, because if you're just looking at the charts, you go, well, shoot, I don't know where to target, because we're past every target that I see, and I don't even see anything on the horizon here.
Looks like your channel line might come in there.
Yeah, I mean, maybe the upper channel at 25.85, maybe that's it. But again, I look at these levels in the S&P and we blast right through them almost each and every time. So it's like, I don't know what's going to stop it. But there is going to be an event. It's going to be probably more event driven, I would assume, that really turns the market, or we see some sort of blow off top where you get, and that's the day that I hope happens, but I don't, I'm not, I don't know for sure that's going to happen. But boy, I would love to see it, that, the Dow up 300, 400, 500 points intraday and then give it all back by the end of the day. And if that happens, that would suggest to me that whatever we saw is some sort of blow off top. But we haven't seen that price action yet, and I know it when I'll see it. And if I see it, I'll tell you, because it'll probably happen intraday, and the next day you'll hear me say, that was probably our blow off top. But I haven't seen it yet, and there's nothing suggesting that we're getting that now. So it's grind higher, and any 15, 20 point S&P dip is looked at as a buying opportunity. And if you look at it right now, I mean, 25.75, yeah. So if we dip down to like 25.60, we get a 15, 20 point dip, the market's gonna find a reason to buy it down here. We're still making higher highs and higher lows, and as long as that continues, then there's no reason for risk to reverse. But I am paying, and I've got, like I said, I've got trackers short. When I say a tracker, everybody's got to understand what I mean by that. So
a toe in the water.
Yeah, I have there is a position size that I'm comfortable with, and you and I trade different position sizes because you and I have different account values and sizes, and I'm not talking about you, Dale. I'm talking about everybody that's listening in. You know, you might be trading a $10,000 account. I might be trading $1 million account. You know, so and so is trading a $2 million account. The other person's trading a $20,000 account. It doesn't really matter, because it doesn't matter how much money I'm trading versus how much you're trading. It matters on where your comfort level is, and everybody should have what that comfort level is, and it should be sized appropriately to your account, meaning that whatever position you take, if you're wrong, you're not risking more than, like for me, is more than 1% of the account value on any one position. But some of you might think, well, I can risk 2%. Some of you might say, well, I only risk like 0.5%. But it's got to be something. You know, it can't be 50%. Like if I get in a trade, if I risk 50% of my account value in this one position, that's fine by me. That's crazy. You know, that's not within a normal realm of, you know, of risk management. So whatever the number is for you, and I'm not here to dictate and tell you what's right and what's wrong. I do think that if it's within about a 1% risk of your account, that's probably average, I would say. You know, if I took a position and I lost 1% of my account value, I'd say, okay, that was within my risk parameters. I would say that's probably pretty normal. Anyway, and again, I'm not here to tell you what's right and what's wrong. I'm just giving you an example. But with that comes a normal position size. If you go, well, I'm willing to risk 1% of my account, and that position is trading, you know, $100,000 worth of currency. Fantastic, great. Then you know what your normal is. Then when I put in a tracker position, I'm usually taking about 1/4 size of that risk. So, you know, like being short the dollar yen, and I shorted it last night. I'll tell you exactly where I shorted it. I shorted it at 1:14.07 last night. 1:14.07, which is right like at the open, right there. Because I, like I said, I wrote it down. I don't have my camera attached, or I'd show you my Post-it note where I have like my risk and where I want to be.
I write trades down on Post-it notes too. It must be a generational thing.
It must be a generational thing, and it's a lot of my mom too. My mom, she's a Post-it note queen. If you go into her house, she's got Post-it notes for everything. She's like, my grandson's birthday is this, you know, the water company's number is this. It's all on Post-it notes. Anyway, so I have it all written down, like where I want to be in a trade, but I didn't. Being that it was Sunday night, you know, and I know that the market we're going into mutual fund Monday, where market's always like bullish right at the beginning, at the open. I didn't want to overexpose myself, so what I do is I stick a toe in the water, or I take a quarter-size position. Not even something that really I even mean to talk about a whole lot, but it's more just so it's on my screen. And, you know, I might make a few bucks, I might lose a few bucks, but it's not really the intent of it. The intent of it is really, it makes me focus on that particular pair. And now my attention is on it, because I do have some skin in the game, if you will, or I'm now, you know, I've got some risk on my account in that particular position. So like for the dollar yen, it's like, okay, I shorted a little bit up here, and even if we make new highs, it's not going to worry me, because what I'm looking at is I'm looking at this big, you know, triangle support. And by the way, just so you guys know, this is the dollar yen, and this is since 2012. So you can see why I'm nibbling short up here, because if we're at the upper end, think about this from a risk reward perspective, guys, and again, I can be wrong, and I'm wrong quite a bit. It's not, you know, there's nothing new with me being on the wrong side of a trade. You know, I can be on the wrong side of the trade all the time, or a lot of the times. But as long as I know that, hey, if I'm shorting here and my risk is 1, but my reward down here is 4 or 5, then I'm willing to take the position. Do you get what I'm saying? By the way, the Canadian data just came out, and I wasn't even paying attention. So let me figure out what that data was. It was a wholesale sales, and it looks like it came in. What's that? Weaker. Okay. Hey, Steve.
Hey,
so okay, so weaker. So we did get the dollar Canadian, which is fine because I'm long a little bit, so it's actually working fine. Cool. So it was a little weaker, and we're pushing higher, but not really doing a whole lot.
I said as expected, mate. It's 0.5 versus 0.5 wholesale sales.
You know what? I had a forecast of 1.1%, and we did 0.5%, so it's significantly weaker. But that's based on the data that I have.
Okay.
Okay, but thank you.
From an undisclosed source.
From an undisclosed source. No, I was just looking at Forex.
The previous print was 1.7, not the expected for this one.
No, the forecast for this one was 1.1%. It's right here.
Okay. Yeah, I'm looking at different. Okay.
But anyway, regardless, it's not having a negative impact, meaning it's not strengthening the Canadian currency. So anyway, but we don't have a whole lot of. I mean, we don't have a whole lot going on until like tomorrow. We got a bunch of European PMIs. It's like, there's not a whole lot of data today. Today's pretty much it. We got some European consumer confidence, but nothing really to write home about. Anyway, yeah. So what I guess what I wanted to point out, and I know I got on a little bit of a rant talking about risk reward, and I hope maybe that conversation helps some of you guys. But you can see why I'm like, I'm starting to look at these yen pairs and saying, okay, well, we're up against pretty key resistance, and that's across the board. You see the euro yen. I was talking about the big 618 retracement up here on a weekly basis. We're up against a lot of resistance in these yen pairs, and I know that risk has rallied quite a bit. So if we have any type of setback in the stock market, any type of pullback, even if it's just 0.5% or maybe 2% or whatever, then it should weigh on these yen pairs. But
I also know, Blake, that you placed a lot of importance on how markets get there, and one of the classifications for you is event-driven, and this certainly was an event-driven pop of the last 24 hours. So did that give you more conviction?
Yeah, because it's the buy the rumor, sell the news. Like I said in the weekend video, the week ahead video, I said, hey, it's very expected that Abe's gonna. This is more of a legacy win for him, and and so it was all factored in, and so I think the buy the rumor, sell the news is very appropriate in this case. Yeah. So, but hey, Steve, good morning. How are you doing today?
I'm good, mate. I'm good.
Mr. Bogie.
I heard that you have had a nice night yesterday, right?
I did. We did have a great time, and you know what? I remember just a few months ago you were dealing with some serious plumbing issues. We're dealing with the same thing in our home. So
yeah, fortunately we solved it. I'm sure you're going to do the same.
Yeah, we're gonna have to a jackhammer through the bottom of our house to get to the pipes, but yes, we'll eventually fix the problem.
Oh, Steve, you sold your house when you had that problem? Is that what you said? You sold it?
No. Steve's been in his house. The Greeks are a little different than Americans. They stay in their homes forever.
They hand them down.
Yeah, they hand them down. Yeah. But Steve, I'm going to pass it over to you because I got to get ready for my trading session. But I hope you had a great weekend with your family as well.
Yeah. Okay.
My pipes aren't working that great lately, guys.
Your internal pipes.
I don't know. I think anyone else in here have an enlarged prostate? Raise your hand.
Oh, geez.
I guess not.
We may have a few, actually, believe it or not.
What can you do? It's Mother Nature. How you doing, buddy?
I'm good.
Don't worry about it for another 10 years.
Thank you. You're making it sound so good.
20, maybe.
Yeah, one day, the vast majority of us, actually. I know that Blake talked about yen, although I lost a few minutes because I was.
Your volume's low.
Yeah, I'm sure it's going to fix itself. You know how it works.
Okay.
Give me a second.
I don't think Blake said he was long gold, Martin.
No. I didn't say anything about long gold. I said that I know that.
No,
Blake
I mean, Martin's asking if Blake said it.
Okay.
He talked about the yen, so you're assuming he also is long gold, but he didn't say that. Okay.
No. He
Thank you,
didn't say
Martin.
that, and I don't think that's the case, to be honest. Okay. Let's have a look at. Let's begin by having a look at risk and having a look more specifically at some yen pairs. I don't know if people actually got to read our blog post that we published on Friday. If you didn't, you can find it on the ForexAnalytix blog. If you go to forexanalytix.com, on the homepage there is a link called blog. It's free to read for everybody. The last blog post is called. It has to do with the yen and the yen pairs. It's called Yen Crosses Where to Now. Actually, I can actually show you. And you can check it. You can check it out there. Now, after that, I'm going to show you specifically. So if you go here to the blog, you'll see it's the last blog post. Okay, this one. So it has both Elliott wave and technical analysis having to do with forms of technical analysis, and Stelios writes the macro part as always at the beginning. So we're going to go over some of the crosses here, but before we do that, and since everybody's focused on risk and how long this risk on can go on, etc., I want to show a couple of things about the Dow Jones, especially about the Dow Jones, before we move forward. Okay, as I've repeated many times, this is a 9 year. We are in the 9th year of the uptrend. It has been well contained in the vast majority of the cases, with the exception of that corrective move lower we had, which dropped below the ascending channel within this very nice ascending channel, and then we created a steeper ascending channel started in the beginning of 2016, and then in August we actually started creating an even steeper ascending channel. So each channel is breaking above the previous channel, meaning that after being 8.5 years in this uptrend, we are actually accelerating the pace that we are ascending. Obviously, this type of behavior, I'm not going to say it's abnormal, because we've seen that before. It's it's the euphoria stage of any uptrend. Is obviously something that's not sustainable in the medium to long term. That's as simple as that. Okay.
Sir Isaac Newton, Steve, is when he looks at a Dow chart to prove his theory,
he talks about
he does a headstand.
Okay. Also, we have an RSI reading that's like that we have to go like 60 years back to find it, and also.
You still gutting it out?
If we go on a monthly chart, you'll notice that we've had 11 out of the past 12 months were months that the Dow closed higher. And I repeat, this happens after an already well-extended uptrend. Okay, so in my mind, there is absolutely no idea that we're in the late stages of a bull market where we get euphoria. In essence, people are buying simply because people think it's going to go higher. So it has nothing to do anymore with fundamentals. It has nothing to do with anything else. It all has to do about, sentiment. The last stages are always sentiment driven, and it's always about there's going to be another person buying it at a higher price. This is the usual bubble mentality that we first had seen in the 17th century with the tulips, And since, unfortunately, we've seen, plenty of times. So, obviously, unfortunately, history repeats itself over and over again in the financial markets. So it really doesn't come in as a surprise. So what I'm trying to say is that on one hand, you should be careful because, being short as a medium to long-term thesis might first get you knocked out of your account before you actually manage to succeed, because the euphoria stage can last for months to come or for weeks to come, and sometimes the last part of it is like extremely strong. Okay,
the classic saying is that manias first break the people who bet against them, then break the people who bet on them.
Yes, that's very true. And yeah, and on the other hand, keep in mind that, if you're considering that this is the best, I've also seen a lot more indications, for example, at the usual question to US households, when is the best time to invest in stocks? We're at an all-time high. And guess when the previous peaks were? Before the financial crisis of 2008 and before the 2001. Yeah. So all indications that have to do with sentiment are extreme, and price is extreme as well. Okay. Now, having to do, I see a question about the IWM. I always maintain the position here that this price action is not bullish, is not bearish, sorry, because it looks like a sideways consolidation. And on Friday we actually broke above it. Now it remains to be seen what we're going to do today, but I had a friend asking me consecutive questions on Twitter about it as well, that it's showing weakness, that it started showing weakness first, etc. I maintain my position that this does not look like a bearish price action. Okay, this is a choppy, almost horizontal, it's not horizontal, it's a little bit descending consolidation. So I would expect another leg higher from here. At least that's what the price action tells me. Okay, so let me answer that as well, since it's connected to indices. Okay, now let's go have a look at the yen pairs, because after Abe's easy, re-election with a vast broad majority, obviously we had some follow through there as well. I can tell you one thing for sure. First of all, this was a triangle we were tracking. Initially, we were tracking it as a possible ascending wedge. But when the price action started, being very, very slow after breaking the ascending wedge, it was more than obvious that that was not an ascending wedge, because simply put, if that was an ascending wedge and we had a break below it, you expect that within a couple of days you should see some kind of an acceleration, and when that does not happen, you should look for alternative patterns that can explain the price action. So this was most likely than not a triangle, and now we're seeing a push above it. Now, on one hand, this is a bullish break higher, which you usually expect to see in triangles. On the other hand, very often, the last move above a triangle, the move above a triangle is the last move before a deeper correction. So, I wouldn't advise anybody buying up here, obviously, because where would your, risk be? Obviously, at the very minimum, it would have to be, below this low here. So let's call it roughly 111.50. Okay, so you would have to have roughly a 250 pip stop loss. So that means that you will have to be looking for a lot higher prices, like at least a little bit above 116, which is far from guaranteed, right? So you either were long and you're keeping your position, or you were not. So in this case, you should probably be patient with USD yen. On the other hand, some of the other yen pairs, because don't forget that the rest of the yen pairs, of course, will move according to what the yen does and according to what the other pair does. So, for example, we have euro yen here. Okay, this is possibly a triangle, and as we had said, as long as we were holding this zone that was, strong resistance, and it has now acted several times as support, there's no reason to be bearish. This could have been a triangle breaking to the upside, but in order for us to see any follow through here, we would definitely need to see something from the ECB, something bullish from the ECB. The implied volatility of the euro is the highest of all currencies for this week, and it makes sense because we have the ECB meeting. So that means that the market is expecting more fireworks from the euro than in comparison to any other currency for this week, and that might be the case. So the question is, how is the ECB going to handle the whole transition to tapering, and how are they going to communicate that to the market? Are they going to imply that it's going to be faster than expected, slower than expected, pace, and everything will matter. So it's not a matter about seeing a dovish or a hawkish ECB having to do, with their intentions of what to do is, but mostly, on their intention of how fast to do what they want to do. So we're going to see, some communication about tapering, et cetera, et cetera, et cetera. I know that our friend Pipinisi likes that when I say it. The question is, are they going to give us more or less than the market expects? Are they going to sound more hawkish in their expectations for the future, or more dovish? Is the ECB and Draghi going to handle the situation so they don't put another bid under the euro or not? Because don't forget that the euro has been rejected once again from the 118.50 area, but on the other hand, it hasn't confirmed that it's moving lower. We are tracking this potential head and shoulders formation, but we still haven't seen a break from the neckline, and the price action from the high has definitely not been impulsive yet. If Draghi manages to push down the euro and we comfortably break the 118.50 and we see some acceleration, then we would easily be looking for a move down to this area, which is at roughly 114.50. At the same time, if the yen has not gotten obliterated for some reason, which I don't think that's going to be the case, that means that the euro yen might also end up reversing lower as well. But until that happens, or unless that happens, I tend to be looking higher, simply because the price action does not give me a reason to look lower yet. Okay, so that's what I'm looking with the euro and the euro yen. So Thursday is probably going to be, for this pair specifically and the euro USD, the critical day. And the same thing will apply with the DXY. We all know that the DXY is, has as a major component the euro. I think it's 57%. So although we are getting very close to the 94.20 area, which we've said plenty of times that's going to be like super critical, because a break above it will indicate that the correction that started with this descending wedge and this little small inverted head and shoulders formation is going to actually prove to have more legs, but I'm not sure we're going to see that break until Thursday. So the market might hold on to that level until then. In any case, since 57% of the DXY is the euro USD, if the euro USD breaks below 118.50, it's absolutely certain that the DXY is also going to be breaking above 94.20. And that will be a major psychological break, because a lot of people are monitoring the index. And although they do know that a major component is the euro, so theoretically speaking, you could get the DXY rallying just by having the euro going lower and the rest of the USD pairs being, let's say, neutral against the dollar. Still, I think that this kind of psychological break will also bring more dollar strength to other currencies as well. It's going to spill over. Okay, so we said 2 weeks ago that it's very important to see what's going to happen. Are we going to get a break below 93.20? Sorry, 93 area, or 94, or above 94.20? we didn't get that. We were hoping that we will get a resolution last week. That didn't happen. But it's very, very likely, especially with the ECB, it's extremely likely that this is the week that we're going to get, some good idea of what's happening with the dollar, and is it resuming lower, or is it actually turning higher for a push towards perhaps 97, 98, 99. These are the areas I would be looking for after a confirmed close above 94.20. Okay. Other yen pairs. Let's have a look at a couple of more, and then we can go to questions. Okay, this is the pound yen. The pound yen, reacted perfectly from a technical perspective. We had this triangle we were monitoring for a big period of time. We got a false break, but regardless, we got no false breaks on the resistance. So after 3 attempts to break above this area, we finally managed to do so in September. And then we got a correction lower. It was a channeled correction. It came back, it retested this trend line that we were holding until we finally managed to break it, and now we're moving higher. So we've moved both higher from the descending channel, and we've held this resistance this time as support. So the same thing applies here. Until I get something telling me, that I should be looking lower, every single thing that has transpired here is bullish. Okay, we've had a rather impulsive move higher. We had a corrective move lower that found support exactly where you would expect it to find support, and we're moving higher once again. So, although I wouldn't exclude anything, why would I be short? So, I keep looking higher until, proven that that's not the case. If you want to know, though, about another pair that was looking very bearish and also technically held perfectly, that's the Kiwi yen. We all know how weak the Kiwi has been. We've talked about this huge triangle plenty of times. I mean, you can see that the triangle's resistance is like one of the most strong horizontal support resistance areas that we currently have on any FX pair. It's this area. You can see that dates back to 2014. So since then it has held plenty of times as support or resistance. And then we had this ascending trend line, as a triangles. So that's like a flat top triangle. And as you see, on Friday, once again, we came down here, we tested it. We also had some confluences here with some other horizontal support, etc. And we rebounded from it today. So this has also held from breaking down in this case, of course, but it has held. Okay, so a break below that area would have been a major, unquestionably major move, a bearish move that would probably target a lot lower levels, but it hasn't happened yet. So there is always the possibility that along with the other pairs resuming higher, that at least the Kiwi yen can rebound higher, perhaps towards this zone, or perhaps even higher, or you never know. It might even make it all the way to, which looks hard at the moment, but you never know. It might make it all the way once again to the triangle's horizontal resistance. So, we haven't had a break here. Let's have a look at the Aussie. The Aussie has also broken above a descending channel that was holding this corrective price action. As we had indicated back then, it would either make another move lower towards there, or if it broke above, it might even target new highs. That seems to be the case for now. Obviously, this also trends in an ascending triangle. In a triangle, this one is ascending, so it might, even if it breaks to new highs, it might find once again a resistance just a little bit higher, so I would be tracking that. But anyhow, this does not look bearish as well. So, I can understand that somebody might see this and say, okay, this is neutral price action, and, I can accept it, but it definitely isn't bearish price action. And let's have a look at CAD yen as well. before we go to questions. Okay, and this is CAD yen. Okay, CAD yen has a huge inverted head and shoulders formation. It broke above the neckline, and it now seems to be correcting within a descending channel as well. This price action, for the time being, does not look bearish. Okay, so especially on a daily close above 90.80, I think we would have more than the required confirmation that we should at least be targeting the 161.8 of this move lower, which is at 92.35. So this is a good recap about the yen pairs, and at least no matter what your bias is, at least which technical patterns we are looking, and most importantly, which are the key levels that you should be watching, for confirmation that yes, it's resuming higher, or no, it's reversing and going lower once again. Okay, let's have a look at questions now. Luca says that he thinks, I think that goes, it was quite earlier, but I think that goes for the USD yen. Luca thinks that the USD yen might be headed to 115 and then some type of a consolidation. It is very, very likely, although, we might find some type of resistance up here at 1450. And, the next area is at around, in my opinion, these highs there at around 115.50. So, but anywhere between 114.50 and 115.50, it's, quite a significant area that can cause the yen to either consolidate or, start some kind of a correction lower. UJ breaking and close above 114.40 has me targeting 115.70, Luca says. Oh, yeah, it's exactly within the area we just talked about, Luca. And possible extension to 118.30. And he also gives us a chart. Let me put it up. Yeah, so you're looking at it. Let me zoom. Okay. Oh, yes, because we had these lows there. Okay. Yes, 115.70. Yeah, it's between the area. It's roughly the area said 114.50 and 115.50, and I also have this. And then you're looking at 180.13. Yes, I agree. It's also a significant area. You're actually looking more in this area that I've marked there. As you see, I have it. If you go back, yeah, it's the same horizontal area. We might even make it to there. That's what I had drawn up there, but as I said, we also have other smaller areas lower that can cause a pullback. But definitely, I wouldn't project a move above 160 without a correction lower. So I'm in total agreement with you. USD CHF showing nice follow through after crossing above 200 EMA. Let's have a look at it. And as you understand, this also is going to be driven. Okay, there we are. Okay, USD CHF has already reached our next resistance area. Okay, we had said since then that a break above this zone should target the next zone, which is here. Then the next zone is a little bit above parity, in my opinion. So, the situation is what it is. That as long as we remain now above, I consider now this area, the 97.70 area, an area of support. So even if we see a move lower, unless we break below this area, I would still be looking higher. Okay. Otherwise, if we move directly higher, and as you understand, this also bodes well with the possibility of breaking below 118.50 if Draghi manages to persuade the market, that the ECB is more dovish than expected. So in this case, we will definitely see a move to parity, actually, back to parity. Now, having to do with the 200 EMA, I agree with you. We tested 3 days, here, there, and there. 3 times it rejected price action. The 4th time we actually managed to close above it. We are seeing follow through now. But on the other hand, as I showed you here, we're currently right on resistance. So buying up here, probably not a good idea. Seeing a pullback towards this zone and then buying, I think it's a much better idea. Russell, we covered. Blake didn't say that he's long on gold. By the way, let's have take a look at copper. Okay, let's have a look at the metals actually, since you didn't ask directly for metal, because a friend is asking for copper as well. So let's have a look at all the metals. Okay, gold. If you remember, I was quite clear on gold that after we got rejected up there, even when we had this nice up day, it was Thursday, I think. I said that listen, as long as we stay below 1300, you know, I'm inclined to look lower. One of the reasons, and you know, it's my bad for not starting by mentioning that, because you know I got carried by the yen pairs. One of the reasons is this, is because we're actually about to have a major break lower in the treasuries. Okay, so we already closed below this ascending channel support. We've held so far that low that we had seen here in at the 6th of October, but honestly price action, you know, looks like it wants to keep moving lower. In that case, that also advocates for a continuation lower for the metals, and for the metals I mean now the gold and silver. Okay, we've many times talked about how strong the inverse relationship is, and or how straightforward the correlation is if you look at the yields, which is the inverse of the bonds. So you know, the more we see yields go higher, the more we see bonds go lower, the higher the likelihood that we're going to see gold and silver resume lower. So you know, I don't know why I would want to be long here, honestly, as long as we see this continuation lower with bonds, and you know the correlation remains, and as long as we don't get some very strong risk aversion, I don't see a reason why gold or silver should rebound from current levels. Okay, same thing applies here. So I'm still expecting them to move lower unless we see some big reversal in the treasuries. And this is what we had seen with copper, and it has played out perfectly. You know, I talked about another corrective move lower from there. It happened. Now we're seeing some kind of a consolidation. Now, you know, I'm not a magician. I can't tell you that if this is the end of the consolidation and another move higher, or we might have a little bit of a move lower and then higher. But I can tell you one thing for sure. When I predicted that we're going to move a little bit lower and then higher, it was simply because I can see where the third wave is here, and we had already recognized two impulses higher. That's what happened when we were expecting this move lower here, and that's why we expected the move lower to then have a move higher to new highs once again, because until proven that it's actually reversing, we have a series of impulsive move higher and followed by corrective move lower. So I think this is some kind of a fourth wave. And you know, either from here or a little bit lower, I think that copper is going to break to new highs. Okay, so that's what I think the situation is with copper. Income tax accounts for about 40% of total receipts. Looks like Bitcoin. Sorry, that got me confused. That looks like Bitcoin. If you want to clarify. Sorry, I was looking at probably the looks like Bitcoin was referring to something else, but you put it in the same sentence that I was looking at that point. Perhaps the Dow Jones, I'm guessing. Euro yen 134.30 massive level, previous stop, and golden Fibo close above sets multi-year trend line in play. Let's see what Luca is looking. Here it is. Yeah, the 61.8. Sorry, I forgot to mention about that. Look, I have it on my weekly chart. You're absolutely right. I have this on my weekly chart, but I don't keep long-term fibs on my daily charts because then they get cluttered too much. Yeah, definitely, this is a major level, and if we do break above it, indeed, we're going quite a lot higher. Now, about 140, let's get there and we can discuss about it. But yes, I agree with you. Right now, the EU is at the bottom of daily channel since March 2017. Bounce intraday. Olivier said that, but he's not here and anymore, and he hasn't put the chart. Yes, I'm still short the S&P. Absolutely, I will let you know if something had changed. Aussie Kiwi looks good for new longs this week. Let's have a look at it. I totally agree with you. I mean, there's no question that Aussie Kiwi has been extremely strong. Of course, that's mostly on the Kiwi. Okay, here it is. Okay, so we had this break higher. The next resistance zone I have in mind is at 113. Obviously, in the short term, it's overdone. So, you know, I wouldn't exclude the possibility of something like this. Okay. So some type of a correction lower, then higher, quite likely. And, you know, it's going to help the market also, you know, get over some, in the short-term chart, some overbought conditions. So, you know, I wouldn't be buying Aussie Kiwi here, but as you said, look, anyhow, you mentioned that later this week, I agree with you. So perhaps a few days of weakness, perhaps down to this triangle, or, you know, some fib levels we can draw and see, you know, where we have some confluences. In any case, as long as we are above this high, the 110.20, I would remain bullish. There's no question about it. So I'm in agreement. USD CAD, let's have a look at it. Okay, USD CAD. We broke below the ascending channel. And, you know, what I had said when we did that is that, okay, this is a first move that can indicate that the USD CAD is resuming lower. But for me to believe that, I want to see this support zone break lower, because then I'm going to have confirmation. We also had the 50 DMA riding this zone. So it was like a double confluence, okay? That did not happen. And actually, when we started seeing this type of price action, which was like a triangular consolidation, you can draw the triangle, you can understand what I'm talking about. You know, it started looking more likely that the USD CAD has another leg higher than lower. So as it seems, we might be headed to this area, which for me is like extremely critical, the 127.80 to 128 area, before we actually push lower once again. So in the short term, the USD CAD remains bullish since it broke above 126. In the medium to long term, I remain bearish, but that doesn't mean I'm going to be selling yet. I first want to have confirmation, as I would do so if I got the confirmation I need there, and then I'm going to be selling. But I don't want to buy the short-term move higher. I want to sell the long-term move lower. Okay. Martin says, sorry, my mistake. I've typed something that was referring to indices when Blake was here, but he left. In general, it was S&P and Dow Jones related. The question I have is purely theoretical. Where is the money to come from to fund this behemoth when the next half cycle begins? Income tax accounts for about 40% of total receipts. You can expect a bear market to pressure that revenue source. And the yield curve is pinned to the floor these days. It has nowhere to go but up. I cannot see how President Trump can possibly cut taxes without slashing spending also. Otherwise, he must borrow the difference. Listen, Martin, I'm in total agreement with you. I really believe that, and that has nothing to do with political commentary on Trump specifically. I would refrain from doing that anyhow. You know, we don't want to take political positions. But I can tell you one thing for sure, and I would tell you, first of all, I'm not an American, so I'm not a Republican, I'm not a Democrat, okay? I have no stakes within either party, but I have to tell you that Friday night, we had a very nice political conversation with Chatterman. When I say political, it didn't have to do with people and persons, it had to do with policies, general policies, and, you know, the system, how the system works, etc., etc., etc. One of the things we talked about then is that one of the big mistakes that Trump is doing at the moment, actually, in my opinion, the biggest mistake is that he's tying his success with the stock market, which makes no sense. The reason it makes no sense is the following, is that Trump has 3 years ahead of him, and the chances that we're not going to see a major sell-off and some kind of a recession within the next 3 years, in essence, the chances that we're going to get a 12-year business cycle without a recession are so low that, in essence, he is tying himself with the performance of an economy and a stock market that even if he does everything very well, there is a very good chance that it's going to blow in his face, regardless of what kind of economic policies he pursues. So although he seems to be a smart individual, I don't understand why he's doing that. I think that's one. Yes?
Nanette has told me he has a busy day. He's been waiting.
Oh, sorry. That's why you're here. I didn't even look at the time. Sorry, my mistake. Okay, yeah. So bottom line, I agree with you. I think we're going to have a downward trend, and it's going to be rather soon. And then the situation is going to be very tough. Okay, central banks have already exceeded their possibility, their capabilities of helping out, and they're going to have to invent new things, etc., etc. Okay, we have to do this conversation another time. Enjoy the interview, Dale. Sorry, mate, I didn't look at the clock.
Yeah, that's okay, buddy. You're a passionate guy. Okay, everyone, welcome to Ned Kirkez. Hi, Nanette, I just made you the presenter. Looking forward to having a conversation with you, my friend.
Hey, buddy, nice
Thanks
seeing you
patience.
again. Hey, thank you.
How are you, Nanette? So great to talk to you again, my trading warrior brother. You want to just flash your webcam so people know I'm not BSing on that.
Let me.
Tell me this guy doesn't look like Vin Diesel, and he's an action figure hero in movies and in trading.
Oh yeah, preferably trading at this point. Yeah, movies. Yeah, maybe we will see. But yeah, thank you. Yeah, I know a lot of people been telling me that I look like a movie star, like Vin Diesel. Yeah, actually,
I started that for you, buddy.
Yeah. Basically, it was you who started it. I agree. Let me just turn off my camera here and turn it on again.
Yeah, just for a second.
I don't know if you can see me now.
I just see a green box and it's black, but
wow. Yeah,
it's okay. You know what I want to ask you is, and we've had, I don't know, 5 interviews or more over the years. I don't think I ever asked you why you chose your Twitter handle of Tarantula. What was the reason behind that?
Yeah, it's a long story. Basically, I will try to be short. Well, first, I started to do a lot of posts on Forex Factory back then, and that was like in 2009 and 10. I was really doing a lot of posting on Forex Factory, and I needed to pick up basically my nickname, right? So back then we had a global financial crisis, and there was a lot of things going on. If you remember, first euro-dollar went up. It was a huge spike to the upside. Then it started to drop, and then everyone started to short euro-dollar. And I actually, well, then when all of the people started to short euro-dollar, I very occasionally I went long. So basically, there were a lot of good counter trend trades back then. And you know, a tarantula is a spider, and usually when he weaves his web, he goes up and down. So I really didn't care what was the herd and where was the herd going. So yeah, I was basically going both ways. I was trading both ways. I was making
so spiders, you know, they can be bullish and bearish. Anything to do with all the different legs that they have to travel on?
Well,
or that they're hairy. There he is. Or that they're hairy, unlike you.
Yeah, well, it's hairy, unlike me. But you still can see. I'm not sure that I'm showing the camera now.
Yeah, we see it.
Yeah, great. And well, my hair is cut short. I don't want to have a long hair. So basically, I also do a lot of sports, and I also, you know, it's like my style. So I always cut it to the short, 1 or 2 millimeters.
Right.
So it's good. But I still have it.
Okay. Oh, look at that guy. All right. So, all right, let's get serious now, because you're one of the better guys I know. And, you know, our last conversation was right after the French elections, and we had that breakaway gap in the euro. And I do recall, you know, we had a little discussion, and you were like, you know, it doesn't have to be filled. You know, how everyone always thinks every gap has to be filled, and if we talked about maybe it's a breakaway gap that may not be filled for, years. And, you needed technical reasons for that scenario to play out that never manifested. So you were right not to try and, short the market into a gap fill. So that was a great call. I walk in here today a little bit, you ever have days you walk in and you don't see much, and you're kind of like you're scanning your screen and you're looking for things, and today's that kind of day. So I'm very interested with what you have on your radar today, buddy. And looks like we're going to start. You have the pound up first, so you could start wherever you want.
Yeah, I can start. Let me show my screen. Okay, so you should be seeing my screen now. But I need to
got it.
Right. Yeah. Okay. Let's see. Maybe Citrix will change it in the future.
And best of luck on your next motion picture.
Thank you, my friend. Thank you.
I'll go to the movie, I promise. I'll go.
Yeah.
All right.
Well, we will see. Yeah, who knows? You never know. Okay. So, basically, gaps are very, very common in stock market and indices, mostly in stock market. In Forex market, they're not very common. But when they happen, first, what traders need to do is to analyze whether the gap is a common gap or a breakaway or runaway, exhaustion gap. There are a lot of types of gaps. Well, basically, I'm pretty much comfortable trading all these major pairs, but I need to say that pound yen has been my favorite since like maybe a year or two ago. So I do trading on euro dollar. I can tell you now my opinion on euro dollar, pound yen, and pound dollar.
You know what? I want to stop you there, okay? Because I believe that it only takes one, Ned. So I mean, if you really have the rhythm of an instrument like you're talking about the guppy, why do you even need to be anywhere else?
Exactly. Well, basically, because.
Go ahead.
Yeah, the answer is I totally agree with you. And most of my trades have been definitely guppy, pound yen, or I call it dragon. And the thing is, sometimes you might miss a good opportunity on other pairs if you only take a look at one single pair. For example, pound yen, it has a trend, but when you trade intraday, sometimes there might be an intraday consolidation. And I don't like to trade anything like consolidation. So then I move to trending pair. And I always scan every single time frame. I start from monthly, then I zoom into weekly, then daily, 4 hours. So I'm always doing a top-down approach, top-down analysis. Because people, I simply cannot understand why people are struggling to make any money after 5 or 6 years. And the logical explanation is bad money management. It has nothing to do with trading, with technical analysis, because it's not hard to learn it. And when you do top-down approach, you're 80% of the time on the correct side of the market, because every time has its own trend. But you cannot trade on a minute time frame and expect that your long-term goals will be fulfilled. You need to
have all your time frames in agreement to go with the trade, going all the way out to your telescopic monthly? Huh?
Yes, I will explain now. Okay, let's do a quick round off of top-down analysis. Just an example.
Okay, I like it.
Okay, let's say monthly is in downtrend. Okay, weekly is in uptrend. Okay, what does it mean? It means that the trend is still to the downside, but on weekly, the time frame is retracing. So if you want to trade using a piggyback momentum from monthly time frame, if you want to piggyback momentum, then you need to go to do on retracement time frame. So just for example, let's use this. If monthly, as an example, is downtrend, weekly is downtrend, daily is downtrend, 4 hour, let's say, is retracing. So you're using basically 4 hour entries to piggyback momentum from higher time frames. So you need to do a top-down approach. I always align time frames, and when I see that there is a counter trend momentum on a specific time frame, that is the time frame of choice. And usually for intraday movement, you can see a counter trend momentum on, let's say, 1 hour or 4 hour time frame. If you go on daily, weekly, let's say I never trade on monthly or weekly, but sometimes I can find a daily trade. then basically you need to turn it into a swing trade. That is on pound dollar, and that is what MACD helps me a lot. For example, for traders who don't know, we need to have 3 time frames aligned. If weekly is to the downside, like we have a thick red histogram, then daily we have also a thick red histogram. Now I expect something on 4-hour time frame. 4-hour is having a thinning histogram. So you see, it started to reject from this point, and I did the analysis today explaining that it should reject from 32, maybe closing below 31.80, because definitely this is a piggyback momentum from a higher time frames. You know, when you're riding something from higher time frames, we call it a piggyback, right, in English?
Right, right.
You know, so that is, you see, so you just align time frames, and you need to have a confluence. You need. So
you're actually your 4-hour time frame. You're looking for reactions, counter trend moves to fade off your month.
Exactly.
From the monthly.
Exactly.
Got it.
Now, in this example, it's weekly.
Yeah.
In this example, it's weekly, because monthly it's up, but I don't see any agreement on weekly, because weekly is down and it's trying to cross. So definitely this is already a down move. Daily is strong down, and where we have a counter trend move, it's actually on 4-hour. But you know, we also need to pay attention to these Camarilla pivots, because I'm a very big fan of Camarillas, and people who actually are following me know that I do on Elite Currency. That is my partner website with Chris. We also do Elite Currency courses, and that is what I teach people, how to trade Camarilla. You need to align all of this with Camarillas. So if I see that it's rejecting from my EMA 89, it also has a bearish candle. It's rejecting from weekly H1, and it's counter trend momentum with a thinning histogram. It tells me that today's movement should be definitely bearish. At least what I do is, when I'm in a trade, I always protect my trade. So if I see, for example, that this candle or next candle cannot break this L1 support, and I have a short here, I will just move my stop here, and I will be still in profit. So the biggest thing and biggest mistake traders do, they don't know anything about money management.
They don't lock in and protect profits when they have.
Yes, they don't protect profits. And today you need to protect profits, because if you trade intraday, you will be stopped out. You can basically, we call it a death by 1,000 cuts. You cannot trade 10 simple. You cannot have 10 losses in a row and expect that you will get it so easily from that. So you need to use profit stop. Profit stop is what banks use. So once they're in profit on a certain level, they just move their stop loss in profit. It's called profit stop.
And I didn't know that. How do you know that from watching how Admiral trades, or from other banks?
No, how banks trade, because my great trading buddy and my friend he's still a trader, and he traded for banks, and now he's doing his own fund management, but he mostly trades equities.
But he's the guy that told you that banks use trailing stops.
Yes, right. He told me that, and I believe him. He was also back then the head of risk compliance in a big bank, so he knows a lot about those things. So
that's a pearl. That's a pearl. So if they use them, why shouldn't we use them?
Yeah, I mean, I use it. I mean, a lot of people ask me, okay, if you see the trade has a potential to go 100 pips, do you really use 20 or 30 pip stop loss? Well, the answer is simple. And now I will tell you again, guys, why it's simple. Because you need to use the ATR. If the ATR on 14 days, pound dollar is 100 pips, guys, if you take 50% of that, you're good. But watch this. Euro dollar is 66 pips. Do you really think that you can make 100 pips on a single trade on intraday basis when the ATR is 66 pips? Don't get me wrong, but it's almost impossible.
How about this in an ad? People that want to be swing traders that are unwilling to risk a daily ATR. I say, if you can't be wrong for a day, how can you be right for a week?
Excellent.
What do you think?
Yeah, I mean, I really need to quote you, Dale. Please send me this after we finish our conversation. I will put it on Facebook, and I will say, guys, stick this to your screens. I totally
Yeah.
agree with you. You always had great sayings like you can trade $10,000 and live only if you live beneath an underpass, right? I remember your quote.
All right. Well, I have a fan with my Pinkertisms, but
Yeah,
you know what? There've been some great pearls like that you've already given us today. Now, before the interview, you said you're pretty busy, so you can wrap it anytime you want. But I want you to be able to, show your website,
yeah,
so
yeah,
where
just 10, 15
people could
minutes.
follow you, because you're a natural teacher too. Besides being a good trader, you're a natural teacher, and a lot of people aren't like that. You get right. You know why? Because people get bored quickly, and you get right to the point of the meat of the issue. You don't dance around it. You go, you got to know ATR. You got to do this. You have to pay attention to this. So I want people to know how to find you if they want to look for you.
Yeah, yeah, definitely. Now I will wait. I will pause my screen. Now I will open the website, and definitely they can find me always on Admiral Markets, but of course on my personal website. This is now. I will show the screen. So this
you're
is
still working with Chris. Chris and
Yes.
you are still okay.
Yes, both
Another great technician, Chris Swordziak.
Swordziak, yeah.
Yeah.
He's an Elliott wave. He is basically teaching Elliott waves, and he's trading his own method. It's called SWOT. You can see here. We also redesigned our website. Here on this section, you have free education and analysis. And we are updating it on daily basis. There are testimonials. Of course, everything is verified also on Forex Peace Army. So, well, this is my personal course. It's called Elite Currency Camarilla MACD. So basically, I teach people how to trade with these methods. Also, Chris has his own system.
What do you charge? What do you charge for that course?
Sorry, Dale, did you ask me how much do I charge?
Yeah, charge for that course.
Yeah. Oh, well, basically, we're usually running some promotions, but at this point, the SWOT is approximately 450 euros, and Camarilla MACD is 737 euros. So 1737 euros. So basically, I lowered the price because a lot of actually people came to me to teach them by Skype. And if I do it by Skype, that's more expensive because I really need to take one by one trades, and these are actually video courses with my full support. Right. So it's 17,700, and for Chris it's 450. So it's not. I mean, the prices are. I know it's like.
I just wanted you to put it out there. So, let me ask you this one market question. What's your, say, intermediate term view of the dollar in here? Are we going to go to 97, or are we going to 90 first?
Are you referring to euro dollar specifically?
Well, Dixie, euro, same type of thing. Euro dollar's fine. What's your intermediate term view on euro?
Yeah, I did the last analysis, the previous analysis on euro dollar, I think on Friday, and I posted also on Forex Street. Yeah, I knew it would drop here. So guys, you need to pay attention to this. This is M pattern shaping up, and this is 4-hour time frame. So if you see us close with a strong body below this 1792 on 4-hour time frame, I think it could go down, because definitely the trend is to the downside. We had a pullback on daily, and now daily, you see here, both MACDs are below zero line, and we have a thinning histogram. We also have a big candle. This is bully candle, bearish bully candle, that basically ate previous bullish candles. So this is strong bearish. It's like rail road or railway track. But definitely it's bullish. Also M on daily. So if this closes below the level, next stop is 1710. Below this, we can go easily to 1600. So my interim outlook is bearish, especially because of this big head and shoulders on daily time frame. This is
Yeah.
SHS,
Right.
shoulder, head, shoulder. I mean, watch this. This is rooftop. Okay, rooftop also head and shoulders. Shoulder, head, shoulder.
Right.
Big shoulder,
Yeah, like
head,
a
shoulder.
fractal of the bigger pattern.
Yeah, we can call it a fractal. I personally don't use fractals a lot.
Okay. Just be
Yeah,
careful. Be careful on the roof. You could fall off and hurt your shoulder.
Yeah, I mean it's already rejecting. As I said,
Yeah.
it started to reject from this point. So basically, traders who traded it could have been like 100 and more pips by now. But we need to be
what 4-hour close time frame? What the broker you use? What 4-hour close do you use? GMT or?
Yeah, this is basically GMT +3 close, but it corresponds to New York close time. It corresponds to New York close time.
Okay.
Yeah, in my opinion, it's the best. Is the best. GMT +3, and definitely it corresponds to New York close time. And most of, I mean, Admiral Markets platform uses that perfect GMT time, so I like it a lot.
Thanks so much for dropping by today, Nanette. It's always, I have a great time, and I learned from you today. I learned a few things. I'm sure everyone who is listening live or sees the video later will, pick up some of the pearls. Thanks for dropping them on us, and may pips continue to rain down on you and Chris. And it's nice to have a friend like you in a shark-infested business, my trading warrior brother.
Thanks, Dale. Always great seeing you, and looking forward to meet you again. So next time we can do a bit.
We'll have to have a beer. We'll have to have a beer while we're both on the planet someday. All right, buddy?
Yeah, definitely. Definitely.
All right, Nanette.
Well, have a great trading day and a great trading week, and talk to you soon. Cheers, guys. Talk to you soon.
Cheers.
Always trade safe.
Nanette Kirkez, a true pro.
You. Thanks,
thank you. Thank you, FaZe. And we'll see everyone tomorrow for Turnaround Tuesday, see how things work out. Good hunting. There's probably still some action going on like all day long in the trading room, the other trading room. So remember, everyone, wait for trades to be compelling enough. Don't hunt for trades. Let them grab you by the throat. And there's always, and also remember Blake's t-shirts, FOMO. I miss trades every day. Blake misses trades every day. Steve does, but you know what? It's okay. There's always another train coming around the corner, my friends. See everyone tomorrow. And don't just count your pips, count your blessings. Thanks again to Ned. Thank you, Steve, for your great analysis today, and Blake. And maybe we'll have some other team members show up tomorrow. Adios.